What's going on, guys? Welcome on in. We made $376 trading BX Blackstone. That's the recap for today. We're going to dive into it like we usually do. So today is Friday the 22nd, and technically on the day we locked in at 285. However, yesterday we locked in 90. So totaling out to be 375.62. I rounded up to 376 to make it easier, and we'll recap the trade. So currently, right now, we are up $1,925 across the month. I do have two open positions, which are pretty much around flat from when I opened them. So we'll talk, well, there's not much to talk about there. We'll talk about them if they close out before the end of the year, or I guess before the end of the month, not year. We got one more month after this. So let's dive into it. The chart that I want to pull up is right here. Okay, so here's BX, and I ended up just taking this thing off today at, I can tell you the executions here, exactly. So, the initial trade plan, by the way, just to kind of cover that, was risking approximately $70, I believe, and we were looking to make a little bit over $100, or just around $100, on the $10,000 account. The trade was then copied on the 25K, which is why we have the larger P&L, but I like to kind of just play it. I like to, because I've been using the 10K for a while, I just risk based off that sizing, like based off that account. So that's what I do. And then it just gets automatically copied at the same ratio, or like 2.5x on the bigger account. So we entered at 185.90, and then I on average exited at 194.86, which is pretty much right where I was looking to get out. My original sell was at 194.75. And then what I ended up doing was I trimmed a tiny piece of it off yesterday at 91, just above 194s, and then I got the rest out just over 195s today, just because we essentially hit my target of 195 initially. I thought we could see a bit higher, but I just don't want to play that game at this point in time. So I thought we could see maybe 197, but I'm thinking back, saying to myself, you know what, dude, let's not be, stupid here. It's Friday. I just don't want to hold this over the weekend, and maybe it hits TP by end of day, maybe not. I don't know, but it's already hitting my first target, so I'm just going to get out as I normally should have, or as I normally would do. The reason why I mentally thought to myself, maybe we can increase this target and move my stop to break even and take some of it off yesterday, was because of just how big of the move we got yesterday. Like, we pretty much, if I bring this down to my original level, 195, we pretty much got, like, look at how close we got to the target in one day. I entered here on Tuesday, so I had to hold Tuesday, Wednesday, and Thursday. Well, it was end of day Tuesday, so I had to hold really Wednesday, Thursday. So, like, it was 48-hour hold. But my thought process was like, yo, we got so much, we got all the way there already. Let's just kill this, or let's look for a bit more if it has the juice. And then I said to myself, like, why am I going to do that? And that's my thought today. It's like, why am I doing that? Why am I going to start moving goalposts mid-game? When I enter the game, I set my goalposts, and that's it. And I think a better way to approach this is, because, you're getting it could be a FOMO situation a little bit, not a big deal, but, a little bit. It could be a couple of things, but the way I'm kind of viewing it is the market starts to heat up, as, you can see by a couple of trades working, right? Market starts to heat up, and you start thinking to yourself, oh, we might want to try to capitalize a bit better here. Because, looking back, look at my last trade. Go back to, one of my more recent trades, and that was Netflix. And if you pull the chart up here, look at this monster. Absolute monster. Now I end up getting out here. And look at where it went, right? So I'm thinking to myself, holy fuck, if we have momentum, if the market's got momentum right now, we might want to look for more. Now, I think a better approach would be, as we enter the trade, going with a plan ahead of time for that. And that's what that's what my mind is kind of like settling in on now. It's like, hey, when we enter the trade, say to ourselves, okay, we're going to do this at this point. We're going to do this at this point. And what I should have done here, if I'm going to be honest, is I should have looking back, had a plan for, okay, the market's kind of hot right now. If we get that heat into end of year, this could be good. Let's see if we can capitalize a little bit. I'm not trying to, and it's not about capitalizing by trying to double down and my normal position size is this and I'm going to triple it. No, it's not like that. It's making a small tweak or two during a period where we're warm, market's warm, and trying to capitalize based off of that, just as when the market's kind of cooling off, making a small tweak. But you kind of have conflicting, ideas here, because at the same time, I look back to myself and I say, I mean, this is, by the way, side note, like this is raw me talking to me, like completely raw, like what I would say to my, like this is what I'm saying to myself, because like you kind of enter a period where it's like, okay, check out the month. Not that the month necessarily means anything, right? Because you had a bad last month, so now you make it back and more on this month, which is cool. But you also know at the same time that these numbers are not realistic. Just as I know that a 25% win rate is not realistic for a long period of time, just based on how I do things. It's not going to be that. It's not going to stay that low forever. Just as I know that this is a win rate that, yeah, you might see someone, post and say, yo, check out my, post this and just kind of chill and be like, yeah, my win rate's so fucking good. The reality, dude, is that like, yeah, your win rate might be high, but is like, what's the sample size? And I'm here to tell you, like, my sample size is 13 trades for this month. And really it's half of that because most of them were traded twice on a copier. So it's really like, it's like 6 or 7 trade ideas, Yeah, I can handpick 6 or 7 trade ideas that work just as anybody else can and tell you that I got a 70% win rate or whatever, So it's not like that. That's not the point. Like the point is like, when I know these things, I recognize this, I think to myself, okay, so maybe now it's not the time to shoot for the moon or to size up. Obviously, I'm not doubling my size, but now it's the time to be a little more conservative. So maybe you size a bit lower. And that's kind of the idea behind this. Normally on trades on the 10K account, I look to make approximately 125 to 150, maybe closer to the 125 range. Will I risk less than $100 on average? Is kind of what I'm looking for. And in this case, the trade makes 107, which is a little bit low compared to what I normally look for on this account. But the idea was like, I'm not shooting for massive targets. We have a hot market, cool, great, but let's be serious here. Let's be realistic. Like we might this is going to roll over at any time. I'm not going to have 20 and 30 in a row. Like it's not going to happen. So that's kind of like the reality that I try to have set in at times so that I can kind of center myself when I'm looking at these things. And so that's the situation going in. I think a better approach, which could be talked about or utilized in future trades, is a scale out approach where it's like, okay, I'm going to take my first target at 1.5 to 1 risk reward, and then my second target at 2 to 1, and then, trailing stop loss from there or something along those lines. And then that could take you, on a good run. The problem that I always have when I say that and I go back and forth, it's not that you're changing the strategy. The strategy is the same. It's just it's the tweaks. Like, is it worth the tweaks? And I come back to reality sometimes and I say, to be honest, dude, it's not that big of a deal. It's not really that, because when the market's hot, your win rate's going to be higher. So you're going to win more anyway. If you manage risk the same, you're probably going to win more trades in a given month compared to a cold month, like last month, for example, or a choppy month in the case of a momentum strategy. And then when the market's cold, it's like, oh, we got an alert going off right now. When the market's cold, you can make some tweaks, some small tweaks, but your win rate's going to be lower. So it's like it's managing these things, and it's easy, I think, for people to kind of make these adjustments or think that they need to make these adjustments when really they don't have to. So while I go back and forth and say, yeah, maybe there's a better scaling out approach, I almost always come back, and this is like literally me live kind of talking myself, almost not talking out of it, but talking myself into like just relaxing about this is not that big of a deal. It really is not that big of a deal because it's 6 of one, half a dozen the other. Like, it's the same thing. Like, why? Because if, like, hear me out on this, right? Let's go to I'll use Netflix as an example because Netflix was a good example. It's on the screen. And I know this is getting a little bit long, but I think it's useful commentary on, it's all psychology. It's just really all it is. It's just trading psychology. So if I go back on my Netflix trade, it was something like this. I was looking for approximately a move of something along these lines, and I took my profits at 8.15, I think. So it was like, this is my chart, right? Now, here, you could say to yourself, okay, well, obviously the downside here is that we missed out on all this, which is huge, right? But go back on the recaps to last month. Go back the past like 4 or 5 months, and you'll see that over the course of most of those months, we did not get this. Like, this wasn't a thing. It didn't happen, right? So in the situation where over the past couple of months, if you operated a scaling out approach where maybe I take half of my position off or 3/4 off here and then move my stop loss to break even once, and what would have ended up happening would be you'd see a lot more opportunities or situations where you get your first target and then we come back and you get stopped out break even, and the trend can generally, that's been the general trajectory. The trend continues, but it's choppier. So that would have actually made me less money in those months. Whereas right now, it's a shiny object, looks great, dude, you're a dumbass, why aren't you scaling properly? Or not proper, there's no right way to do it. Why aren't you scaling out differently? Why, what are you doing? You're missing out on all these gains. But at the end of the day, what I end up finding is that these do not happen all the time. So when they do, you think, oh, I want to take advantage, but you don't have to take advantage, because in times when the market is doing this, as you have seen for this month, it's perfect data to tell you. Sample size is not huge, but then you can go back over the past couple months, you see the same exact thing. Go back over the past year, you see the same thing. We have more winners. So does it really matter if I'm trying to capitalize on more of this gain when I'm going to win more trades anyway? Just take, setups that present more opportunities that are presenting, because they are in this environment, as you see with some of the recent trades. Take the trades and they win more. Your win rate will make up for this. And the reality too is, it's not like I'm going to ride my entire position. No, I would lock in at least half my position, if not more, probably more at these levels. And then so I'm going to end up making, a little bit more money, but I'd be scaling it out. But I make a little more money. Don't get me wrong. But is that worth it for the times of the year, which is more often than not? Let's be real, because we don't get momentum like this all the time. This is somewhat rare. It happens, but it's not all the time that you're going to get this environment. Different markets is going to be different, I guess. Strong bulls versus strong bears. You'll get it more. Or you'll get it in stronger bulls and stronger bears, whereas weaker bulls and weaker bears, you're not going to get it as much. But is this couple of times you get these situations going to make up for the more often than not take partial profits here, then come back, hit your stop loss, and then so you're going to have smaller winners? Right? So it's legitimately it's finding, how I see it, is it's finding the balance between win rate, risk reward. And then as you kind of find that balance, just kind of sit in there and just sit there and accept that that's your balance, and you're going to roll with it because it works for you. And that's kind of the way I approach it. It's like, just find your little nook, and then that's it. You just kind of chill there and then operate it, get good at understand, how that works, figure out okay, here's how I do things. Here's how it makes the most sense to me, and then roll with it. Yeah, it's just how I see it. I mean, obviously there's a million ways to do it. And obviously you could say, yeah, in trending environments, I hold my entire position for at least a 2-to-1 risk reward. And maybe that works, but then how do you justify, you'll get caught in some situations where maybe we were trending and then eventually you're going to get caught in the situation where it doesn't work. And then how much do you lose? So I don't know. That's where my mind's thinking. That's how my mind thinks. We'll see. I got an alert on Tesla literally live in this video. Let me just take a peek at what that looks like on the daily time frame. Oh, baby, we got something to look at there for sure. Tesla's breaking out. So could be a swing trade to be had there, to be honest. I might even enter that because I have not traded Tesla in a while, and I kind of like it. Just because as a live example, you're seeing, I'm not going to enter it right now because it's 11 a.m. So I'll give it kind of some time here and see if it holds that line. But you had a big move, right? On big volume. Cool. Great. Awesome. Tesla, you're doing great. And then it's the consolidation kind of occurs, but consolidation on lower volume. Okay. And then can we get a break of that? Can we get a breakout on higher volume? So far today, volume is at 22 million. Yesterday, traded at 58 million. So it's going to need to kind of push through here and get some more volume coming in, because it doesn't really have, it looks better. You're on pace for a better day, I think, than yesterday and the day prior, it seems like, but need to see that follow through into the close. If that occurs, you're probably going to have a bigger volume day on the breakout here, which is, all you can ask for on Tesla. So we'll see. That's the recap. Sorry it was super long, but hopefully that was helpful in terms of kind of seeing, how my mind thinks. Again, on the month, we are looking at the month of November, which we are 22 days through. We're hanging tight here as TradeZella is loading back up. But on the month, we're up 19.25. I don't know what this number, what the month will finish at. I don't know if there'll be any more trades, to be honest, that we lock in or, that hit TP or stop by the end of this month, because tomorrow or next week's a short week. It's Monday through Wednesday, no Thursday, half day Friday, I think. So we'll see. But that's a recap. TradeZella, code TC10 and link below. They have a Black Friday sale coming up. I'm pretty sure you can save more money with the code, but either way, check it out because that's coming up soon. And if you're ever looking to get in, I looking back, should have paid for this during a Black Friday. I bought it in the summertime when there was no deals, and I used no discount code, so I pay full price. But it is what it is. I like it. I use it, and it's helpful. And it makes the recap videos easier. It makes it easier on my brain to think about this stuff. So there you have it. Peace.